It's a real pleasure to be here. Lawrence and Eric and Keith Schaefer are, I have to say, some of the most important people who are on my radio show. My radio show has got nothing to do with Al Corlin. It's got everything to do with people like Lawrence and Keith and Eric. It's what I try to do is I try to give views from people like them that aren't given every day in the daily press. And that way our listeners are able to make up their own minds about some of the things that I think in the daily press are absolutely ridiculous. Having said that, a couple of comments. Sabrina asked me to make a couple of comments, my views on the market. I have to tell you that after being in this business for over 30 years, I am very, very optimistic about the precious metals sector right now, both the commodities themselves and also the companies involved in that. Why do I say that? Well, a number of reasons. The main one is the largest economy in the world, you know, where I live, the United States, is in big, big trouble, and it's getting worse and worse and worse. I did a Kitco audio today where I interviewed and chatted with a fellow by the name of Clyde Harrison. Clyde is no rookie in this business, so to speak. Clyde is the co-founder of the Rogers Raw Material Fund, brilliant guy, lives back in Chicago, and I said, you know, the question that I posed to Clyde was, we had a huge spike yesterday. You know, we went over 1270 an ounce. We're seeing a little bit of a bottoming today. What's your opinion of that? And he said purely and simply, Katie, bar the door, we haven't even come close to seeing where this thing is going to go. And I said, so why do you say that? And he said purely and simply because the United States is going to have to continue to print more money. They don't have a choice. When that happens, the price of gold, or the gold and silver, are really going to be the only solid places to be. I would agree 100% with that. Let me just give you a quote that was in the Wall Street Journal today. Anglo-Ashanti, and you all know who that is, okay? They stopped hedging. They announced yesterday that they were going to stop hedging. We have gold at an all-time high, and Anglo says we're going to stop hedging. I mean, that tells me something, and I'm sure that would obviously tell you folks something too. Okay, having said that, I'm going to bring Keith Schaefer up here. Let me tell you my purpose of being here, and that is for my radio show that appears on the, or that appears. How does something appear on the radio? For my radio show that airs on the Genesis Network, we're going to make a program out of what's going on here right now, including the comments of folks like Keith and also, and obviously Lawrence and Eric, but also including questions that you folks might have. So don't be bashful, because, you know, one thing that I have found out being a bit of a media guy is it's not all about the media, it's about you guys, okay? And that's what we're doing right now. Keith Schaefer is a fellow who I met a few months back. He started a new newsletter. It's a great newsletter dealing with the energy sector, something that I think has been overlooked of late. And he's, as I said, he's been on the show a half a dozen or so times already. This guy's very, very bright. His insights are incredible, in my opinion. And I think that the energy sector is something that we all need to consider along with the metals. Mr. Schaefer, you ready?
I'm ready.
He's ready. Okay.
Thank you, Al. Welcome, everybody. I'm kind of the odd man out here, and I've learned to get used to that, as everybody else in town here really is focused much more on the metals side. Maybe that's why they put me first. They were scared you'd all leave after Lawrence and Eric if I was the last guy. But I wanted to give you a bit of a brief outline of the topics I'm going to quickly move through in my talk today. One is to really explain to you what I see as a huge opportunity in the oil and gas sector right now that's come about from technology that is going to just guarantee investors dozens, if not hundreds, of discovery stories over the next 10, 20, 30 years. And that, very simply put, is that we can now get oil and gas out of rock. And for the last 125 years, in the age of oil, we've almost all had it come out of sand formations deep underground. And now we can get it out of rock. And I'll go through very quickly what that's going to mean for your wallet, investing in some of the top discovery stories, both in Canada, the US, and abroad. And so what I have is a website where you can go and access for free many of the stories that I write each week on the oil and gas sector. And my job is to make different topics in the industry very accessible, simple, easy to understand, so everybody can really get what the opportunity is here to make some money in the junior and intermediate sector, because that's what I cover. I don't cover the majors. Much like Eric and Lawrence will cover the juniors on the hard rock side, I cover the juniors on the soft rock side. Mostly Canadian listed, the odd US listed security. And the reason I started this newsletter a year and a half ago, because as I was looking to diversify my portfolio a bit, I realized that there was no place on the web that I could get the type of information that I wanted to that was written in simple English. So that's my job. I'm a translator. My degree is journalism. And so all I do is translate a lot of the research that I see on the street, the institutional research, into very simple layman language so everybody can understand. So every time I come to a metals-focused conference, I try and explain to everybody that investing in gold and investing in oil is actually very, very similar. They have a lot of the same things. You want to see much of the same things. You want to see a good management team. You want to see a good share structure. And much like gold, oil is a hedge against declining US dollar and inflation. In fact, it's probably become almost the #1 derivative outside of gold for this action. There's been more new ETFs and derivatives spring up around oil than any other commodity in the last 5 years. So if there would be one difference between the two, I would say that whereas the conspiracy theorists might say that the US government and everybody wants to keep a low gold price, they actually want to keep a high oil price. Oil has become the #1 barometer for the health of the world's economy. If people see low oil prices, they don't think, oh, I'm saving money. They think, wow, the economy must be doing really badly. And that's not what everybody wants to see. So for once, we actually have the system in our favor a little bit. So what are some of these new technologies that are going to be creating and are creating all these opportunities for investors? Well, there's 3 main ones, and 2 are fairly simple to understand. The big one, which has kind of almost now become passé, is 3D seismic. So this is from your mining, you will understand what seismic is. In some of the uranium stories now, they're starting to use a lot more 3D seismic. And frankly, I really don't understand why more metals companies use 3D seismic. It gives an amazing picture deep underground of what's happening, and you can often pinpoint almost exactly where the oil traps are. So this greatly reduces your exploration risk. In fact, in the oil and gas industry now, if I'm investing in a company that has less than a 70 to 80% success rate, I wonder what I'm doing. So that's how good the odds are now. The technology is making these stories. And so the other big technology that you're seeing a lot more in the news now is horizontal drilling. And that's pretty easy to imagine. And I've got a photo of it coming up here. And so basically they can now turn a well horizontally to go through oil formations and bring in a lot more oil. Now what they have to do to that hole, that well, is in the rock, as after the hole has gone through the rock, they have to fracture it. They blow it into a million pieces. They shove water down that well at unbelievable pressures, and it blows the rock apart for many meters around the well bore and allows the oil and gas to come into the well and get produced. So this technology was done and perfected about 12 years ago in Texas in the Barnett Shale, and now you have just seen in the last decade all over the US and Canada new shale plays come up. It has become the big buzzword. But what's also happened is that there's been a lot of environmental concerns about this, and I'll talk a little bit about that. But what these 2 technologies have created is a whole new set of discoveries that can become available. There are many, many shale deposits all around the world. And we're seeing it now almost become a mature industry in North America with lots of discoveries down in the States. The average retail investor was able to make unbelievable money over the last 5 years in shale gas plays. And now you're seeing the shale oil plays like the Bakken, the Cardium in Canada, also enriching investors. So again, here you can see simply what a horizontal well looks like. And these fractures, again, or fracking as it's called, is just some form of liquid, usually water, sometimes oil, that goes into these wells and blows the rock apart. And so what does all this mean? Basically, it means a lot more profit for oil companies and their shareholders. Because what happens now is that with these technologies, you're able to see where the oil is. You're able to access much larger formations than you were before, much more horizontal lying formations. And the beauty of it is everyone has known for decades that these oil formations were there, that the rock was there, that the oil was there. But They didn't have the technology to get it out. So now what's happening is we're all going back into these same old formations where there is literally almost no exploration risk and just learning how to get the oil out of the rock the best way possible. So that's a great position to be in when you're doing exploration and basically have no exploration risk. It also opens up a lot of new plays here in Canada and the US where this technology has been developed, so you don't need to go international to get some very big plays and see some big moves in stock prices. And what's happened now is that a lot of these horizontal lying formations that are being accessed for the first time are quite big, like the Bakken in Saskatchewan, North Dakota, Montana. It goes for tens, sometimes hundreds of miles. You could liken it to some of the potash formations you hear about in Saskatchewan. So what happens is that the risk of these wells, of each of the next wells, is very, very low because the formations are very consistent. So the market pays big, big money for a large, low-risk, repeatable land play. And so you're seeing a barrel of oil in the ground get worth more and more money. So there's a lot more money to be made there for investors. So the simple economics on a horizontal well is that it costs twice as much as a vertical well, but you get 4 to 7 times the oil back, generally, oil or gas. And as I said, one metric that you can use to gauge how oil companies are valued is price per flowing barrel. So if a company is producing 100 barrels of oil and they have a 10 million market cap, that's $10,000 per flowing barrel. So what's happening, because these plays are getting better known, we're getting better understanding of them, and that they're large, they're relatively low risk, the valuations are going way, way up, which of course puts more money in investors' pockets. And this is an example of some of the plays that you're seeing get opened up. There's the Barnett Shale down in Texas here. There's the new big Marcellus play in Washington, in New York and Pennsylvania. Up here in Quebec, you've got the Utica that's going on. And this is mostly a U.S. map, but up here there's the Bakken play. Up here there's the Cardium play. So all these are basically new discoveries where for years, up until about 5 years ago, everyone thought that North America was done. No more discoveries to be made here. And this new technology has totally changed that. So there's an example again of Bakken, the Bakken Formation, which now basically is shown to go all the way out here, all the way up into here. So and that map is probably only 2 years old. So there's many new discoveries being made all the time, and investors are paying up big bucks for just raw land packages. And that's being reflected in the share price. Cardium is another new one. The Bakken was about 5, 6 years ago. The Cardium really got hot last year, and now you're seeing all kinds of buyouts in the Cardium, that just like is in the hard rock side, on the soft rock side, the majors come in, buy up the intermediates come in, buy up the juniors, creating lots of wealth, creating opportunities for investors. This shale gas revolution, shale horizontal technology revolution, has meant two very different things for the main commodities in oil and gas. For oil, it's been a boon. For gas, it's been the death knell. Now with gas, there's so much gas around that the price of gas has gone through the floor. Whereas with oil, because you have global pricing, it has meant unbelievable wealth for investors. These new discoveries get great valuations immediately. They get world pricing right away. And so you're seeing some very big moves in the junior markets on some of these stocks as they make their discoveries. Not quite as big as you see like ATAC and other companies here on the hard rock side, but still very, very good moves. So what do I look for in the stocks that I'm buying in oil and gas? So I've got a couple things on my website I'd urge you to go look at: how to invest in oil and gas, part 1, part 2. But domestically, with all these new plays that are opening up, what I do is I get the research from all the different firms each morning, whether it's Richardson's, GMP, Peters & Co., Nesbitt, DS, and I see, who's making the big discoveries, who's got the big land positions, because that's what I want to find. I want to find a junior that's got a big land position around a discovery in one of these new shale plays, because they are generally so consistent and so large that there's a great chance that this play will spread out much farther than people think. And that's where we can make a lot of money for our subscribers. And you want to find a play that can use the horizontal drilling and fracking technologies, where the economics are so good. And internationally, what we're looking for is, again, if you can find the same type of large land position, that's great. That's a little harder to find there because the regimes aren't set up for that in a lot of the foreign countries. But you're looking for a big well. So I've been doing a lot of investing down in Colombia, the North Sea in the UK, where there's been some fantastic discoveries in the last year. The average well in Canada produces anywhere between 50 and 80 barrels a day. And when you're going international, we're looking at wells that are producing anywhere from 6 to 12,000 barrels a day. So that's a huge increase, and these stocks can have fantastic moves off these types of discoveries. So where can investors make money now? So if you want to look at today and you want to get into oil and gas, you definitely want to be focused on oil-weighted companies, not natural gas-weighted companies. One day, natural gas prices will turn up, but I don't see that happening in the near term. So you want to have an oil focus. In the market, what I'm seeing is that the international plays are getting a lot of attention, and the domestic plays are not. Even if you have a big land position in Canada or the US, and it is oily, the market right now is in a funny spot. It's on the junior side, these types of discoveries and big land acquisition packages aren't being rewarded in the market. So I'm spending most of my time researching various international plays that have big potential and can enrich our subscriber base. So these big international targets is what's attracting the speculative premiums. And so that's where we're focusing. So just to give you an idea on a couple things that I'm looking at right now, actually I'm going to mention one other stock. I'll mention a larger stock, a company called Pan Orient. We recommended put this stock out into the subscriber portfolio 2 Fridays ago at 5.5. Today it's around 7. They had a big discovery in Thailand, had the largest well in the history of Thailand, over 5,000 barrels a day. And they pay back their well in less than a week. Most companies, when you're looking at land assets and acquisitions in Canada, if you can get a 24 to 30-month payback, you're pretty happy. And these guys pay back their well in 7 days. So the economics in some of these international places is just fantastic. So Pan Orient has a large land position all around this well that they're going to be drilling 8 more wells in the next 4 to 6 months. So that is a stock that we're watching very, very closely. We still think that's got a lot of room to run. If we were looking at a cheapie, there's a company here out of Vancouver, actually, called Primary Petroleum. And they've been able to put together a very large land package just south of the Canadian border in Montana, in what's called the Alberta Bakken Fairway. The Alberta Bakken Fairway goes from Alberta right down through Montana, through Waterton and Glacier National Parks. And there's 3 big New York-listed companies being very active down there, and they're staying very, very quiet because they've hit oil, but they're still buying land, so they don't want to say how much. So what's happened now is that Primary's land package is getting a lot of attention, both in the industry and in the investment community. And because this deal is not out of Calgary, doesn't have any blue blood management guys from the oil patch in it, doesn't get a lot of respect in the market. But the reality is they've got a hell of a land package, and it is going to get rewarded, I believe, because at some point in time over the next 2 quarters, one of these big New York-listed companies is going to say how much oil they're finding. And when that happens, I expect that play to ignite. Now, it just so happens that this coming Monday, their 8-cent financing is coming free trading. The stock's currently trading around 35 cents, so I expect the stock to be weak for the next 2 or 3 weeks. But I think it's a fantastic story, and management has said very publicly that they're going to farm out their land package to somebody who really knows that play well and get them to develop it for them, and they're going to get a carried 50% ride, which is very smart because this team knows what they're good at and what they're not good at, and that's half the game. That's 2 stocks in our portfolio that we've done very well in. I still think have a lot of room to go. I'll mention one other one that I actually put out today to subscribers, literally just 2 hours ago. Company listed on the NASDAQ, symbols TRGL. And this company is called Tom, Radio, Gordon, Larry. And what this company has is very similar to Primary Petroleum. They have a big land package, but theirs is in France. There has been a huge shale oil discovery just east of Paris. And this company has a huge swath of land there, and they've joint ventured it out to a big New York-listed company called Hess. And they're going to be drilling Hess is going to be drilling the first well. Hess is spending $260 million over the next 2 years, and Toreador, TRGL, has a free ride. So there's only 24 million shares out. They have very small debt. They've got about 8 million. They've got about 900 barrels a day of production. And the anticipation of a successful well on this play, it is one of the most watched plays in the world. Every major is watching this play because this is probably the first big shale oil play to get drilled outside of North America. So when I say that these shale plays, they've really been focused on North America. And we're just seeing, that's why I'm saying over the next 10, 20, 30 years, as these technologies get exported around the globe, there are going to be dozens, if not hundreds, of discoveries that are going to be able to enrich retail investors. So just in conclusion, again, I see my job as filling the information gap for retail investors. I translate a lot of the research to make it very simple, topical. I always try and relate my stories back to the retail investor. How can you make money from this fact, this trend? And what's happening now is these 2-3 technologies are spreading around the globe, creating a lot of opportunities for us. And my job is to make sure that my subscribers get to profit from as many of them as possible. And I don't know how much time we've got left, Al, but if there's any questions or answers, if you got the questions, I'll try and have the answers.
Keith, I'd like to ask you a question first. You've been in the business a long, long time. You obviously see significant opportunity in oil and gas. Could you kind of summarize why?
Well, again, the big opportunity now is that for the first time ever, we can get oil and gas out of rock. And so there are many formations right under our nose that we've known about for years that we're now going to be able to get economic oil and gas out of. And it's a land race to tie up this land and get drilling, where there's almost no exploration risk. And the market is willing to pay big, big bucks in the share price of these companies for that opportunity. Okay, there was a hand. Sir.
How much could I'll go with the shale plays, because I don't know what I'm doing. How much could they produce and could they make an impact on the OPEC control?
The short answer is
Over the next 5 years?
zero. Zero.
None.
None. Not over the next 5 years, zero. You're 10 to 15 years away from seeing the cumulative total of that have any impact, really. Sir, yellow shirt.
Could you just comment on maybe 1 or 2 of your top junior picks in Colombia?
In Colombia, I'm actually not invested in anything in Colombia right now, but if Canacol comes off again, I'm going to have a good look at that one. The problem with Colombia, of course, is that a lot of those deals have come out of Vancouver here, and where the promoters really know how to build up the share structures with a lot of cheap stock. So it becomes very difficult for the retail guy to make a lot of money on the Colombian plays right now. You basically just have to pick 2 or 3 that you really like and wait for them to have some bad news. Allange was a good example of that, where they had a bust on a well and traded down 30-40% on 12 million shares that day. Well, that turned out to be an amazing buying opportunity. Rubiales is probably your safest bet. It's already $25, but it's going a lot higher. It's an amazing story. The number one, it was my very first pick in the newsletter at $9, and it's still going. It's still the single best growth story of any junior intermediate producer in the world.